Benjamin Franklin once said, "There are two things certain in life, death and property taxes." Well, maybe Benjamin didn't say property taxes specifically, but they are certain nonetheless. But what are property taxes anyway? And why do they even exist? And how do they come into play when you buy a home for the first time? Let's find out. What's good, everybody? My name is Parker Gray, and I'm your friendly neighborhood realtor, and today we are talking about property taxes. Now, before we get into the video, if you learned something valuable today, please be sure to hit that subscribe button and tap the notification bell so you'll never miss an upload. Now, you may only be concerned about how property taxes apply to being a homeowner, and I'll get there, but it's important to first have a basic understanding of what property taxes are and why they exist in the first place. According to Investopedia.com, property tax is a tax paid on property owned by an individual or other legal entity, such as a corporation. Now, you might know that, but what you might not know is what property taxes are actually used for. Property taxes are used as a primary means for funding local governments, which is used to pay for necessary public services. The lion's share of property tax revenue is typically used to fund public schools. In fact, according to the renowned think tank, the Tax Policy Center, in 2017, school districts received 83% of their own source revenue from property taxes, essentially meaning that when just looking at local funding for public schools, property taxes make up the vast majority of it. While property taxes are most known for funding public schools, they often contribute towards many other things like public safety, including police, EMTs, and firefighters, sanitation, maintenance, and a plethora of other things. Now that we've established the purpose of property taxes, let's tackle some of the property tax terms that are integral to understand. First, let's talk about market value versus assessed value. Market value is the most probable price which a property would sell for in an open market. Assessed value, on the other hand, is the value assigned to a property from which the tax rate is taken from. This is an important distinction to make because the assessed value of a property will not always be the same number as the market value. The reason for this is something known as an assessment ratio, which is a percentage of the determined market value by which the property tax is calculated. The percentage varies widely depending on where you live. Some states have an assessment ratio of 100%, while in Mississippi, for example, the assessment ratio is a mere 10%. This doesn't inherently mean property taxes are any lower in Mississippi than elsewhere in the country. It only means that they use a smaller number for determining tax liability. If that is at all confusing, here's an example. Say a property has a market value of $200,000 as determined by the assessor's office. In the area where this home is located, the assessment ratio is 50%, meaning the assessed value would be $100,000. If the tax rate here was 10%, you would determine the yearly property tax liability by taking 10% of the assessed value, i.e. $100,000, giving you a $10,000 tax bill. In some places, there is also a cap on how much property taxes can go up each year. So even if the assessed value increases by a very large percentage in a given year, the taxable value cannot exceed a certain threshold. This is done to keep property taxes from going up by exorbitant amount in years where property values go up significantly. My home state of Michigan is one such state. Since tax increases are capped, over time the taxable value will lag further and further behind the assessed value as the cap is inevitably hit in certain years of ownership. Depending on where you live, there may be other exemptions that contribute to a lower taxable value or tax rate as well. One such exemption that is very common is something known as a Homestead Exemption. While a Homestead Exemption is a legal provision that has various roles in homeownership, for purposes of this video, the exemption in part offers a reduction in property taxes for a primary residence. Its application will vary from state to state, so be sure to talk to your trusted real estate advisor about homestead exemptions in your state if you are purchasing a primary residence, so you know how much the exemption will affect your property taxes. The last thing to pay attention to is a term known as a millage rate that you may come across if you go looking for property tax rates in your area. The tax rate for a particular jurisdiction can be expressed as a percentage, which you likely know how to use. However, you may find that your property tax rates in your area are expressed in mills, which is the tax payable per $1,000 of assessed value. For time's sake, I won't get into the actual calculations, but you can find a lot of information online to help you utilize the millage rate to correctly determine estimated property taxes. Hopefully this gives you a better understanding of property taxes, but it is crucial to understand the relevance and importance of property taxes when you're purchasing a home. Believe it or not, property taxes can make hundreds of dollars of difference in your mortgage payment. But how is that so? Well, lenders and certain loan programs will require property taxes be paid as part of your mortgage payment, prorated monthly for what is to be owed for the year. For example, if your property tax liability is $1,200, your lender would collect an additional $100 per month to put in escrow to ensure your taxes get paid as they become due. Knowing this, it's important to pay attention to the estimated property taxes on a particular home you may be interested in, so you know how that will affect your mortgage payment. This is particularly essential because property taxes for similar homes can vary quite a lot, especially since some school districts have notoriously high tax rates. Keep in mind, if you have any questions about expected property taxes and how much they will affect your mortgage payment, just talk to your trusted real estate advisor such as myself and loan officer, and they will figure that out for you. Note that property taxes aren't always required to be paid as part of your monthly payment. With conventional loans with 20% or more down, you normally have the option to pay them in a lump sum when they become due, instead if you prefer. But that being said, it's often easier for most of us to just pay them as part of our monthly payment, since we don't have to worry about the bills and pay in smaller increments anyway. Hopefully you're now armed with the knowledge necessary to be a well-informed, tax-savvy home buyer. If you already own a home, let me know down in the comments how much you pay in property taxes. Also, be sure to leave a like on the video if you learned something new. And if you're looking to buy or sell a home, be sure to reach out to me, as I can either help you here locally in Kalamazoo, Michigan, or connect you with a great agent wherever you may live. If you want to keep up with me and my real estate journey, be sure to follow me over on social media, and I'll see you guys in the next one. Take care.